This is Hyperwave. I'm Leah Wald, and I'm here with Tyler Jenks. Welcome from Washington, D.C. It's pretty rainy and nasty outside, but we're excited to vlog today with you. We're going to be talking specifically about what's going on in the Bitcoin markets, but let me start by saying that all of this hullabaloo that's been going on regarding the stock market is really quite negligible, but I will mention something about it, which is quite simply, yes, 2 days ago we had a 5% pullback in the markets. We very much, we made more than that in the month of January, made even more than the drop that everybody is screaming about still, talking about the VIX, talking about all this fun stuff, trying to analyze what happened. But again, there's only been one drop in 7 years greater than 5%. It's really nothing. It reversed. We're in absolutely a very serious bull market. And to take it even further, in 125 years, we've never had a bull market go this long without even a 5% correction. So it's nada. Don't worry. So Bitcoin. We tweeted 3 things this morning that Tyler's going to talk about. One was that the bottom put in looks good. And then very specifically, Tyler's going to talk about where we are with Bitcoin that is trying to recover. So thank you, Tyler.
Great. Thank you, Leah. And a very important point about the stock market. This is one of the biggest bull markets of all times. There is no sense whatsoever, technically or otherwise, that it is going to end anytime soon. And we will go into a lot more detail about the traditional markets on other vlogs. But today it's Bitcoin, Bitcoin, Bitcoin. Our tweets that were sent out this morning basically made 3 points. The first point was that it's a pretty good looking bottom down at 5,900. But from our perspective, the importance of what happened on that reversal was that we came down to what I call the phase 3 line of a hyperwave. And we're going to spend some time talking about that today. And even before we had broken through 6,300 going down, I had pointed out in an earlier vlog a line in the sand. And it's very, very important. It doesn't show up in any other technical study, but as you learn more about Hyperwave, you'll see why it was so important. Now, we might revisit it again. We might break it. We might fall below 6,300 on a weekly basis, and then everything will shift. But let's make the assumption today that that is not going to happen, that what we saw with the drop down to 5,900 could very well be a significant bottom. Having said that, in our tweets, we said there are 3 things that must happen. Number 1, we have to get back over 7,500. Check. We did that this morning. We need to continue to climb up to the 10,100 level and break that. We have not done that. We need to climb to 11,100 and break that. From the bottom, through those trend lines, into higher ground. Those last 2 things have not occurred. But we are well on our way by moving up to 8,500 today before backing off a little bit. Now, I'm going to go to screen share, and we're going to take a look at all of the things I just mentioned and give you our take on where we are for Bitcoin. So what we're looking at now is a chart from the bottom at 5,920 with this very nice explosive move on 30-minute charts away from the danger zone, back above 6,300 all the way up to 6,000 972. Then we pulled back to this trend line that I've drawn in, and then ran up to the important 7,500 area and couldn't get through it and came back down. Very disappointed. However, it didn't even get back to this trend line and then broke through 7,500 this morning, all the way up over 8,000, and then pulled back for this third, fourth, and fifth touch of this trend line. But it wasn't finished there. It then moved up very sharply to 8,649 before coming back, touching the trend line again, and then failed to go to a higher high in the last hour and a half. And we've now pulled back down to that trend line. I would very much like it if that trend line were to hold, but I don't expect it to. I think we're going to break below this trend line and maybe come all the way back down and revisit somewhere between 7,500 and 7,750. I will explain why I think that's important. So on a very short-term time frame, we've got a lot of momentum, but we have not yet even come close to clearing the major hurdles in front of us. That's why it's too early to say that this bottom at 5,920 is the bottom before moving higher. We have to take it a step at a time. So let's go to a little larger chart now, a 4-hour chart. On the 4-hour chart, you can see what I'm talking about. Even though on that short-term chart, it looked pretty spectacular coming off the bottom, but with any kind of longer-term perspective, you see that we still haven't even cleared this level between 8,000 and 9,500, which we must do. We then must get all the way up to the 10,000 level and then to the 11,000 level. Here's the 10,000 level right here. Very important. You see all these bottoms, 1, 2, 3, 4. This is a 12-hour chart. That's going to be formidable. But the number that I have been talking about, Leah and I have pointed out over and over again, is kind of a funny little number, 11,100, which is right in this area, but it extends all the way back to the big run-up, the 11,100 area. Right in this area was a top over here, a bottom over here, a close here, and then a number of closes and tops and bottoms as this war, we called it, was going on at 11,100. Very, very difficult for us to get over that. When we do get over that, if we do with this bottom, we will be ready to start talking about upside targets all the way back to the old highs and beyond. But we are nowhere close to doing that. We've got a good little start going here. Now let's just watch it. We will be back on tomorrow to talk specifically about it. I'm going to show you a couple of the other things that I'm looking at in terms of where we are right now with these 3 trend lines I've drawn from the top. This trend line comes from the very peak at 20,000. It sounds like Thor really is enjoying these charts.
Thor loves it.
This trend line starting at 20,000 through this corrective peak that came at around 17,200 and we would have to get about 13,000 now to take out that trend line. When that finally occurs, we're going to be well on our way to new highs. But the two trends that I've been looking at are these shorter term ones. We have taken out the first one, which is all of these tops coming down that took us all the way down to 5,900. We closed above that earlier. We are now struggling to stay above that. It is very important that we do. Right now, we'd have to drop back below about 7,600 to begin another climb. I don't believe that's going to occur. It's this next one that worries me the most. This trend line, which starts at the secondary top at 17,000 and includes this top at 11,800 and this top at 9,300 is the one that we have been finally popping above. But now we've got to get to this bigger one, which comes in at about 9,500. We've gotten up to 8,500, but we've got a lot of resistance to fight through. I'm going to show you one other chart, which we have shown you before, and then we're going to talk about Hyperwave and where we are in terms of Bitcoin. What you're looking at now is the entire run-up from $300 to 20,000 on Bitcoin, going all the way back to the beginning of 2016. And I have drawn in a line you have not seen before, which is this trend line that includes the bottom that occurred on July the 9th and the green candle doji that occurred on September the 17th. I consider this to be the phase 3 trend line. And it comes in at about 6,300, and that's why my target is 6,300 on a closing basis on a Sunday night. And we broke through that and then shot up all the way to where we are now at 8,000. But we've got to go Thursday, Friday, Saturday, and Sunday and stay above that line. I'm not so worried at this point of taking out overhead resistance. I've already said that's going to be very difficult. What I am worried about is the ability for Bitcoin to stay up in this rate range somewhere between 7,500 and 9,000. So we've got plenty of room and don't have to worry about this trend line. I will spend an entire vlog explaining why that line is so important. We don't need to do that today. After Sunday, we'll have a much better picture. Okay, take a look at this chart. This is what a hyperwave looks like, but we're looking specifically at one piece of one asset class, and that piece is Bitcoin. Now, I've shown you this chart over and over again, a lot more than most people want to see, but it's very important to understand how all of these 7 phases work. Back to Bitcoin and back to the run-up in Bitcoin prices and back to the archetype. This is what we're looking at, is this long period of flatness, accelerated phase 2, accelerated phase 3, and then the monster that goes straight up to the sky, phase 4. And what we're debating is, going back to our chart, what we're debating is, was this a phase 4 run-up? back to the archetype. Is that what we are seeing here? Or are we simply looking at phase 3 still, which is what this line of demarcation is? If this can hold, and even if we go sideways for weeks and months, obviously this line is going to keep getting higher and higher. It's going to be more and more difficult to stay above it. At some point, we have got to move sharply up over the 19,666 point. When we do that, we will know for sure that this was not a phase 6 bounce, because a phase 6 bounce never gets back to the prior high. So we're going to be running for the next week, the next month, and I would venture the next 6 months trying to resolve this question. I will give you all my experience and all the examples of other hyperwaves in order to draw that conclusion. It's too early to draw that conclusion now. What I would like to do is I would like to show you once again this chart, which is the NASDAQ. It's hyperwave. It looked here like this might be a phase 4 run-up, and this big correction that we had looked as if maybe that was the beginning of a phase 5 drop. But it turned out that we were still in a phase 3. We were still in a phase 3 all the way up to this level, and then we moved into a phase 4. A phase 4. We then had correction down phase 5, the snapback phase 6, and then the long period of time of reaching the bottom again, double bottoming before moving higher. I believe that's what we're looking at with Bitcoin. I believe that this all correction back to phase 3 before we move back up higher than 20,000. We will be out here somewhere, and that will give us a phase 4 angle that could take us up to all the numbers everybody's talking about at 50,000, 100,000, 250,000. But you can see why this is so important to me at this point. I want to show you one other example of a hyperwave back in the 1920s, which is error reduction. And the reason I'm showing you this is because if Bitcoin peaked at 20,000, and if we are indeed in a phase 5 drop, it took us to 5,900. And if we are now struggling in a phase 6 to get back up to that top, that does not mean that we can't move much higher in Bitcoin at a later date. And I'm showing you this particular example, error reduction, because notice what happened after phase 7 came back to the beginning point. It immediately started another hyperwave. And I'm now going to just step aside from screen share to talk a bit about what I've just shown you. We looked at some very interesting charts of the NASDAQ, error reduction, the hyperwave archetype in Bitcoin, and tried to explain why this bottom around 5,900 to 6,300 is so important to me. Because to me, it is determining the long-term future of Bitcoin. And my preference still is that 6,300 is going to continue to hold on a weekly basis, and we are going to move up in phase 3 for many months to come before accelerating into phase 4. But that's wishful thinking. It's based on experience. But remember how rare hyperwaves are. I don't have 100 examples of an error reduction that comes all the way back down and starts another hyperwave. I've only got about 5 or 6 examples of that out of 300. So it's more important for me and my belief in the fundamentals of Bitcoin and blockchain being so transformative that I want to see this succeed right here, right now. I wanted to just mention a couple of other things. It sounds like they are off topic, but I assure you they're not, that have to do with waves and wave theories as a subset of what is known as technical analysis. And technical analysis is far more than just looking at moving averages and trend lines. There are 3 sections to technical analysis. One that is predictive, one that is trend following, and one that is attempting to identify the immediacy of price. And there are dozens and dozens and dozens of techniques in each of those 3 categories. And we've got the benefit in the crypto space of having some experts, the best I've ever seen in 40 years of studying technical analysis, looking at particular techniques for making calls Bitcoin and all other cryptocurrencies. And I'm just going to give a shout out to 2 of them now because I am so impressed with the work that they're doing. The first one everybody already knows and most of you already follow, and that's Tone Vays, who knows a tremendous amount about technical analysis, but has become a specialist in one particular technique that was known for years as the TD system that Wall Street uses. And Tone made a number of changes to that system that he believes and has a lot of evidence are upgrades to the existing system. What most people don't understand is that system that Tom DeMark introduced through Bloomberg years and years and years ago actually came from another system that is called the sequential system that Larry Williams designed back in the 1970s. I don't know the whole story between what happened between Larry and Tom in terms of introducing this. All I do know is that I studied it under Larry Williams back in 1980, and it was all copyrighted material. And the reason I'm bringing all this up is because I have followed that system since 1980, but I've never seen a practitioner as capable and as accurate as Tone Vays in using that system. And I believe that it is a huge benefit for the crypto space and the crypto ecosystem. We have this practitioner using this system in the area that we're so interested in. So if you don't listen or haven't listened to his daily updates, along with thousands of other people that do, please do. The second shout out I'd like to give has to do with another system, which is called the Elliott wave system. Now, some people embrace it. Many people do not embrace it. Within the technical field, the TA field, I happen to be a big believer in it. I followed Robert Prechter's work very closely for 15 years, received every one of their publications. I still have all of them, all of the monthlies, going back 15 years. I was following it closely. But the best practitioner I have run into, and there are great ones all over the world, particularly with the Elliott Wave group down in Atlanta that Robert Prechter ran for so long. The best practitioner I've come across, we all as a group have the benefit of listening to on a daily basis. And his name is Haijin Lee. As Tone does, and is well deserved, he has thousands of followers. When you read the people that make comments, either about Tone or Haijin, so many of the comments go something like this. Well, that's not what you said yesterday. You've changed your count, your Elliott wave count. It's no longer the count that you showed 4 days ago or 3 days ago. Anybody that knows even a modicum of technical analysis knows that every new data point, every minute, every hour, every day changes everything that came before. And particularly using the sequential trading system or the random number generator that Tone uses, or Elliott wave, if done properly, has to constantly change. That has nothing to do with the accuracy of the predictions that either of these or both of these gentlemen have exhibited, in my personal experience and my personal opinion. So, having said that, the reason I'm bringing that up is I believe that what we are introducing, Leah and I, we changed the name from just Lucid Totality to the Hyperwave channel, is because this thing that we are talking about is very, very powerful in all markets. It's just a very rare thing. Elliott wave can be applied to an infinite number of assets. And the same thing can be true for the sequential TD random number generator system. It's always going. It's always working. It can be applied to everything. But here, with the Hyperwave system, first you've got to find an asset class, after watching it for years, that begins to develop into a hyperwave. That's the only time you can use it. It's useless the rest of the time. But we are doing these vlogs because the thing that we are all attracted to and believe in, Bitcoin and cryptocurrencies, are exhibiting all the signs of a hyperwave. So we are going to continue to use that in addition to all the other very powerful technical techniques. And that's why I wanted to just spend this time talking about waves. People talk about Elliott, whose name was R.N. Elliott, in terms of his wave theory. And he defined it in a very specific way. Other people have talked about waves having to do with parabolic moves in bubbles. There are a number of other waves that can be studied in technical analysis. I simply got interested in this particular one because of my background. I was in the Coast Guard for 4 years. I studied oceanography and meteorology at a school on Governor's Island for the Coast Guard. Learned all about currents, learned all about density and waves and the weather, meteorology, and how it interacts with oceans and waters. And from that, I developed a keen interest in the relationships between waves that take place in financial markets and waves that occur in physics and waves that occur in nature. And they're closely related in a lot of ways. I'm just going to tell you one very quick anecdote about that. But anyone interested in getting into some details about the physics of what we're talking about needs to read a book by Susan Casey, Casey. It was published in 2010, long after I had done my work in hyperwaves, 3/4 of a century after R.N. Elliott did his work in Elliott waves, and over 120 years after Charles Dow did all of his work on what's called Dow Theory. And I'm going to just use that as an anecdote in a minute. But the book is entitled The Wave, and the subtitle is In Pursuit of the Rogues, Rogues, Freaks, Freaks, and Giants of the Ocean. So the book is The Wave, In Pursuit of the Rogues, Freaks, and Giants of the Ocean. And what she is really looking at are these monsters that occur unexpectedly in the middle of the ocean called rogue waves. And she goes into all kinds of scientific details of how big they can get. There's some reported over 120 feet tall. There's a limit on how big they can get that has to do with the depth of the water, the temperature of the water, the density of the air, the amount of wind, all kinds of stuff. But it's also every surfer in the world knows about all this stuff because they live it. They know that waves come in groups, and they know that the seventh one is the one you're normally waiting for. And they feel it, and they use it. I spent 4 years in Hawaii. I loved to body surf. I spent 8 years in Southern California, and I really loved to body surf there. And the thing about all waves is they only get so big, and then they disappear and go back to nothing, which is also true about hyperwaves, which is also true about bubbles, which is also true about every security that we've ever seen, unless it's got controlled growth. And I'm not going to get into all the details of that, but here's my anecdote. The father, basically, of all technical analysis was Charles Dow, and people can dispute that. But Charles Dow is famous for what's called the Dow Theory, having to do with the Dow Jones Industrial Average and the Dow Transport. What's interesting, though, is Charles Dow never, ever used those terms, Dow Theory. What he was is he was a newspaper man, He founded the Wall Street Journal, Barron's. He also founded the Dow Jones Industrial Average back in the late 1890s. But he wrote editorials constantly about the market. And the editorials that he wrote described his view of what was going on in the world of finance in terms of panics, in terms of recessions, in terms of bear markets and bull markets. And he used this analogy. He said that markets move the way the ocean moves. And he said that the way the ocean moves is based on three things, basically. There's a major move or a primary move, which is also called a tidal move. It's the tide coming in and the tide going out. And anybody that's been around beaches, Pacific Ocean, Atlantic Ocean, anywhere in the world, knows that there are two high tides and two low tides every 24 hours. And every 6 hours and 12 and a half minutes, you go from a high to a low tide. And that all has to do with the moon and has to do with gravity and lunar pull and all sorts of stuff. But his description of financial markets back in the late 1800s was, that's the way markets move. That the primary move is when the tide is coming in, the market rises. And when the tide is going out, the market pulls back. We've talked about 2 steps forward and 1 step back for the Dow Jones Industrial Average throughout the last 125 years. But that's also true about all markets, according to Charles Dow. And then 4 other people came along and took all of those editorials. The second guy that came along was named William Hamilton, who happened to be the 4th editor of the Wall Street Journal. And he took all of the editorials that Charles Dow had put together, wrote about 200 of his own, and then in the late 1920s, he wrote a book on Dow Theory. And a second book came out in 1932 by a second gentleman by the name of Robert Leah, and he also described what he believed was Dow Theory according to Charles Dow. And then finally, E. George Schaefer did the most work and published letters from the late 1930s until 1948 under the title Dow Theory Trader. The reason I bring up all of that is then one additional individual who is considered godlike in the world of analysis on the technical side of things, started writing a daily newsletter in 1958, every day, called the Dow Theory Letters. And he kept doing that all the way up until he passed away shortly ago. Every day talking about Dow Theory. Almost all other individuals recognizing what Charles Dow was saying began to understand through the 1930s and the 40s, which is when W.D. Gann came up with Gann angles, R.N. Elliott came up with the Elliott wave, and then at the end of the 1940s, is when the book by Edwards and McKee was written on the technical analysis of stocks. Okay, the reason I bring all of that up has to do with waves. It has to do with a natural functioning of what people do when they move between fear and greed, pessimism and optimism. They take things too far in one direction and are shocked, utterly shocked, when things begin going the opposite direction. It's like standing on a beach and being surprised that the water keeps moving higher and higher, and then being surprised that all of a sudden it starts going back the other way. So the primary move, according to Charles Dow, was this thing like the ocean in the tides. The secondary movement was like the waves on the ocean. You can have the tide coming in, but waves are being reduced because of the wind. And they're much, much smaller and don't affect things the way that primary trend does. That's what Charles Dow called the intermediate term in the market. Days, weeks, and months as opposed to years, which is what a major trend is. And then you have a tertiary effect, which are the ripples on the water after the waves had come up the beach and they've crashed, but then you get little tiny waves moving all over the place. That is what you see every day, every hour, and that is what we've just seen over the last 3 or 4 trading sessions in the stock market. Those are the ripples after the waves have crashed, after the main trend is either coming in or going out. Unfortunately, the financial press and investors in general spend all their time looking at these ripples. Technical analysis allows you to understand what all of these movements really mean. And we've talked about some of the systems in the past that can be used for doing that. So thank you very much for listening to this long diatribe, but I find it very important relative to what we've just seen in the last couple of days in Bitcoin. And it will be very important to consider all of this when looking at Sunday's close this week and every Sunday's close beyond this week in terms of where we are on the primary trend of Bitcoin. Thank you very much, and back to you, Leah.
Thanks, Tyler. I guess just last thing to say on my side, I mean, challenges are tough. They're hard, but I believe that challenges are the stories that define us. Bitcoin and crypto is something new that I've jumped into and didn't know anything about. So in regards to all the different experts and mentors that Tyler has been discussing, from the current of Tone Vase, thank you so much, as he has taught me so much every single day, as well as predecessors that I've been reading thanks to Tyler, and obviously Tyler every single day. I find that if you can stick to values I believe in, which is to never exaggerate your strengths and weaknesses. I have a lot of weaknesses in this space, but at least hopefully trying to remain true to my value of humility. I know that through that I'm trying to just learn every single day from these mentors and experts, and from the streets and from the Twitter sphere and from everybody out there that's just trying to push out content and understand what's going on in this space. And we can always develop as humans, and I guess I'm just ending by saying that I feel very blessed to really have the opportunity to learn from such brilliant minds and start to finally understand how to holistically utilize all this that I'm listening and learning to start to understand the space. And hopefully through these vlogs, you can too. So again, please ask all the questions, add your comments, add everything, because through it, we're also going to learn together. So have a great day. And Tyler, thank you for that. And everybody else that's listening, till next time.